Hello guys, welcome back to my channel. So guys, this is Leslie Light again. So guys, we'll be talking about this system. So it actually opened a position here. As you can see, the arrow shows up and then it opens the trade. All right, it opens the trades. So I'm still working on the lot sizes on the pairs with the smallest lot sizes, because remember we always start with the smallest account. So at the moment we have 1 2 3 4 5, we got 5 positions. All right, 5 positions, but however we'll leave it to do what it does best. Then we'll come back to it later on. But so this is not what we are interested in. So we are interested in boom and crash. All right, boom and crash. So let's have a look at it. So let's start with boom 500. So boom 500, what we are having right now, we are having what we call it is a spec strategy. Okay, so I'll give you the settings for mobile as well. Okay, so I want enough screen, so let me make sure that I have enough screen here. If I can go down, if I can go up, I'll make sure that I have enough screen like this. So what we want to start with, boom 500. So on boom 500, guys, let's start with this moving average. So you need first to put this moving average. It's just a simple moving average. It is moving average 21. Method is smoothed to get it away of the candles a little bit. Apply to close. Shift will always stick on a 0. Okay, so on the levels, there are no levels, but there is visualization. On visualization, I'm sorry, I just put it. You can say, you can click here the minutes part, right? You can click the minutes part and you can click this edition. So we don't want it to show on 1 minute time frame. So click 1 minute time frame. Let me show you. So if you click on visualization, at first it will be like all time frame. You click on all time frame, then you remove it, then you come here on 1 minute, you click and you remove this one. Okay, and then you click on it, you click on OK. So you only want it to show on other time frames, but not on 1 minute time frame. You get what I'm saying? Not on 1 minute time frame. Why? There is a reason for that. On 1 minute time frame, you only need to see the spark detector. You don't need to see the moving average. Okay, so the first thing you need to know is when price candlestick, when price is above this moving average, I want you to do what we call a scalp. You will be scalping this market. Okay, so let's take it for instance. Here it wants to cross. All right, so this moving average can serve as a support and resistance. Okay, so I already marked this zone. Let me do this. I don't know why I put this zone here. I don't know what it was for. Anyway, let's forget this zone. Let's forget this zone. Let's deal with this one. Let's change it. So the zones that you're working on, it will be in color. Let's put it on yellow. So we only want the yellow zone. All right, focus on the yellow zone. So let's take it for instance. Let's go back a little bit. Let's start from here. Okay, let's start from here. So at this point where we got the yellow, we can say market spiked up and moves away from what? It moves away from this white line on M5 time frame. M5 time frame. This is the confirmation. Market moves up from this moving average. So what do? You go back to M1. On M1 you got this spark detector. Okay, you zoom out. So we need to focus on one point, guys. Okay, focus. So we got a crossover here on the yellow one on M5. So what do? When we see this spike detector showing, you take this buy, you take this buy, you take this buy, you take this buy. Okay, let's mark when the market cross below. All right, when it cross below, let's find something to put. Okay, because we need to be together in this one. We can put the triangle thing. Oh, how can you put a triangle, guys? I've never used this one before. Drag it. Come on, this is gonna take a lot of time. Okay, let's see what we can have. Insert. Do we have something like arrows or something? Right. We got the arrows. Arrow up, thumbs up. We're gonna have thumbs up. Let's have the thumbs up, okay? Let's have this thumbs up. Properties of a thumbs up. We want it a little bit bigger. That's okay. So you take your thumbs up, you put it here. Right, let's go to M1. Where is thumbs up? This is the thumbs up, okay? So what do? You're in profit all along. So when you see the thumbs up, you stop buying. You stop buying completely. What happened? You start having this long stretch. You see there's no spike here. There's no spike here, okay? Although the spike detector on its own is very good, but I need you to have what I call a reduced risk management, okay? You need to have something what we call, an increased risk management. You need to apply good, proper, amazing risk management when you're using this indicator, all right? Right. So this was a win-win. Let's find another part. So market cross down here and come up and spikes up. So here you mark this zone and let's mark when the market cross below. Okay, when the market cross below, here fluctuated around. So let's put it here. So let's go back and see. We need to track it. Okay, right, here we are. Market crossed above here. Right, market crossed above here. There's no spike, high momentum. So you got to buy. You got to buy small profit here. There's no profits here, only single reaction, but good spike here. You enter, you catch these spikes, catch this spike, you catch this spike here, you catch this spike. It was a neutral spike. This one was a good spike. This one was a no spike, and here you don't sell here. Why? You don't buy here because there is a thumbs up. So you stop. So when you stop, trust me guys, when it is below the moving average market, you can have these stretches. You see these stretches. Market is shooting down. All right, small spike, market is shooting down. You see, look at it. All these are misses. It is missing. You look at this. It is missing the trades. It was okay. Imagine if you don't follow and you are missing all these trades. What can you say? Oh, Leslie gave me a trash thing. Now guys, this is good stuff when you follow exactly what we are having right now. All right, if you follow exactly what we are having right now, guys, this is good stuff. All right, so let's go back to M5. So I think we are done with the boom 500, isn't it? Okay, let me check if we get another opportunity to showcase. Where's boom 500 now? This one. Guys, all of this is just trying to help you out. So we still have a little bit more back here. So let's go to M5. Right, let's look for another perfect example here. Okay, so as you can see, market was going down quite a lot. So this, you wouldn't take this one. Okay, let's try that one. Let's try this one. Let's try this one. Market shoot up here. All right, when market shoots up there. Okay, let's see. It crossed below. We can put it here. Right, let's take a look at on M1. So market shoots up, buy small arrow, good profit. Here it retraced back. it retraced back at this point. So let's mark the point. We want to see what happened on M5. It retraced back on this point. If you go on M5, so if you go on M5, you see that market, it moves away from this moving average, and the moving average will start curling downwards, or start to curl it downwards. See this curve? See this curve? It was now curving downwards, trying to meet the market somewhere here. So that's why we got that one. So this was not a what? This was not a good confirmation. This was not a good confirmation. Guys, you see so many indicator popping up, but don't follow it, okay? Just follow what we talked about. Follow what we talked about, okay? Follow what we talked about. Why? Because if you see at this point, moving average started to curl down, but all this while, it was always on a what? Always shooting up, okay? Now we got the crossover. Now we have the crossover on M5. We got good spikes on M5. So let's mark the zones, okay? Let's mark the zones. Market crossover here above. You do this. Right? Right. So you come back to M1. What do you do? What do you do in M1? You have your point. Now you know that market crossed over here. What you do, you wait for the signal. So while we wait for the signal, let's go to M5, to crash 500. So now we are in crash 500, my beautiful, lovely pair, all right? So if we zoom in, so we want to start from somewhere. Let's start from, market was in an uptrend, uptrend. So let's get this point done. I don't know if we can still have the indicators data on this one. Yeah, we have it. We have the indicators data here. Right. So let's mark when it goes up. Let's mark when it goes up. Objects. Let's go to arrows. Thumbs up. We'll put a thumbs up here. All right. Let's put a thumbs up here on this point where it crosses over. Right. So we got the crossing here on M5. Market crossed down. What happened? You got this spike. You catch this spike. You catch this spike. You catch this spike. You catch it. You catch it. You catch it. And when you're waiting to catch this one, market crossed above. What happened when market crossed above the moving average? What did we say, guys? It gives you a long stretch without long spikes, only tiny spikes. Because market will be saying, well, no, we already break the resistance of the moving average. Now we are trying to push up. All right. So we say stop selling. Now, so we stop selling at this point. Yeah. Let's go back to M5. So this was a perfect entry, perfect trade. So if you open, let's zoom in a little bit. So we zoomed in a little bit. We want to see about this short. It was a short. Let's get our stuff to this short sale. All right, short sale. This was a very, very short sale. It's just a retracement, guys, to be honest. It does not give us much. I presume that. Let's see what we got. All right, this short sale, yes, we got crossover, good spike, and no spike here on the crossover. Yeah, it was a short, very short sale. So if you have the market below this, all right, you would have a good setup. You would have a good setup, a very, 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 very good setup. So I think you're still wondering, like, Leslie, what happened when market did this? So let me show you. Market crossed just for a moment here. Let's go back to M1. You see, for a moment here, it crosses, you get the little or no reaction. Little or no reaction, all right? Little or no reaction. Here, again, we track it. When you track it, you see what happened. Market crossover, good spike, it comes back, it goes up again. See, it goes up, no spike. So no spike here. So you have these points. I want to take you to every little point. Market cross down, you get the spike. Okay, let's mark when it crosses up. Let's mark when it crossed up. Okay, let's mark it cross above here, somewhere here. It's a tiny thing, it's a tiny fluctuation, just like a pause, right? So it crossed high momentum, spike here. You get this small spike, but it crossed above, you see. So it will give you some spike, but there will be no, I mean, the spikes are not as much as it stays down it. All right, so it is worth it that it crosses. You go and look, the first spike you take it, the second spike you take it, and you wait for it to cross above, and then you can close. You wouldn't be in any losses. All right, you wouldn't be in any loss. This is crash 500, guys. All right, so this, I think we are actually cracking crash 500. What do you think? So let's put the thumbs here. We go back. Right, let's look for it. Right, cross down. Remember, when it crosses down, there are no spikes here. They just cross down, spike, catch, spike. Oh man, thing is good. This thing is, oh guys, you need to make money with this one. So here it crosses above. All right, but what happened when it crossed above? I think it came back again in no time. All right, so market crossed down here and crosses above here. Right, let's have a look. Let's have some fun, guys. Right, market cross down again, spike, spike. Here you got the neutral. Here when it crosses up, it actually gives you some spike, but it did cross up. All right, it did cross up. So you are following this. Are you following this? Are you seeing this marvelous thing doing some marvelous works? So here market was fluctuating. So let's put this one on the level of fluctuation, right? We cannot make like this one, right? Let's see what was happening on that zone. So it was above, fluctuated above, although it was giving you some spike, but we really know that this market was ranging. All right, it's more like a range, you see. More market was ranging before breakdown. So when it did broke down, it was somewhere here. It broke down here and it crossed up here. So let's see how fun could we have had when we are focusing on this thing. All right, spikes. Oh man, this is crazy. Man, this is insane, guys. Are you actually looking at this thing? Look, these are all the spikes. Okay, so when market crossed below the moving average 21, I could have made an indicator showing you or when it crossed above, but there will be so many indicators on this chart, and guys, it will be not fun. Okay, and the other thing is, you don't want so many indicators that you just will need to focus. That's why I said no moving average on M1, just on M5. Focus on the indicator. Focus on the everything that you on your marks. Every marks that you do, we are using the rectangle and the thumbs up. That is our mark we are using. You can actually choose to use horizontal lines. You can actually do that, okay, with the triangles to mark these points. Okay, let's go back on M5. So it crossed above. We ignore it. We don't care about it when it is above, isn't it? So here it crossed below. This was a very, very long spike. Crossed below here. So the other thing I want you to take notice of, if you got the highest momentum like this, all right, let's say market was just spiking down straight. When it spiked down straight, remember the market will retrace, all right, to cover this gap. Market will try to retrace always. So I want to show you a trick. Okay, Let's go back to M1. Right, market did spike down. We did it, the indicator did not catch any spike, but market was stripping down just like that. So you get this signal, but it did not give you anything until it crosses above. So this signal did not pay us, all right, because market this was a very high momentum. A market was not creating any resistance here. It was not creating any resistance here. So market will not actually react that much on this stripe like that. So let's zoom in. So market is going back to the trend line. What are we waiting for right now? Let's go and see what we can do about this one. Right. So we got the signal. We got the signal now, right? So as you can see, you did not have so many resistance here. That's why the signal did not pop up. This was a weak resistance, and this was a weak resistance. This was a weak resistance. So we are on this resistance, but market is about to reach the line. So you only have something like 5 or 6 candles for it to reach the line. You can risk 5 or 6 candles to reach the line. So what would you do? You could have entered your sell here. All right, you could have entered your sell here. All right, okay, so that thing is opening some trades. Okay, so you could have entered your sell here, right, and wait for the market to reach the all right, okay, and you wait for the market to reach the moving average. Okay, market to reach the moving average. So market is going to reach the moving average. Let's just put a thumbs here on moving average, like that. As you can see, these are those times where you, okay, tell you what, this thing, we can just do this. We can just do this, all right? Get it off the charts. So market is about to cross the moving average here. As you can see, this is, there are no losses here, no big loss, only this one loss. Okay, so let's see. Let's go back to boom 500. So boom 500 is still waiting to give us a signal. All right, but however, the video is quite long now, guys. The video is quite long, so you need to use it when market crosses below. When market closed below, you need to look down for your sales. When it crosses above, you need to look up forward. You need to look up forward for your buys using the spike detector. Use the spike detector always, guys. Use the spike detector. Okay, so this, I hope this is a friendly strategy. I'm going to upload a what do you call it? I'm going to upload a mobile version of this one. Okay, a mobile version of this one. So this is what we're currently having, guys. This is what we're currently having. So if you see on M5, for the one to close, if you see on M5 that spikes, they are going down like that. Okay, the spikes, they are going down like this. You just spike after the other, spike after the other, spike after the other. Just know that the resistance has been broken. Okay, and it is actually weak. All right, but when you see that spikes are coming down, candles up, spikes, candles up, spikes, candles up, just know that this is the good area to trade. But if you see only the red spiking down like that on M5, just know that on M1 the market had broke all the support that is there, and this support are very weak. Market will just try to come down for the highest peak to spike. But if market was going down, red candle spike and then some green candle spike, some green candles, know that you're going to make money like this one. All right, but with the guide of the moving average, you are going to have what I call limited losses. Okay, so from this point you make money. Here you only have one missed trade, and this one is a two missed trade here. We make money. Here you make money every time. Here you make money. Here you'll be making, this one you'll be making a lot of money. Here you're making money. So this is from this point, you make money all the way down. Guys, this is Leslie Light signing out. Thank you guys for watching. I want you to enjoy, and I want some feedbacks on this Spark Detector. This is what we will be using on this channel for a few months, and we see how we can progress with this one. I've sent you so many free indicators, but for now we want to utilize this one. Every time we work together with this, I'll be posting you some results as well each and every time, so that you see how I'm actually using it as well to try and fish some nice blues from the market. Thank you for watching, guys. Thank you for watching, guys. Thank you.